Hey, Tax Pros. I've got today a video I think you're going to find pretty helpful. This is going to cover the scenario where we're working on a business return, preparing it, and we get through all the input from the trial balance or the financial statements, depending on your situation, and your return software spits out a diagnostic that says you're out of balance. So over the years, I've prepared or I put together a technique I call the Flying J technique. This has nothing to do with truck stops. It just sounds a little bit better than J. So I'll go through this and explain how we do it. And I've found that, at least for me personally, when preparing tax returns and I get a return that's out of balance, I tend to want to jump to one of two extremes. Either the first one being want to go through line by line of my trial balance and double check all my inputs, or the other extreme is to jump right into reconciling retained earnings or capital. I'll use those two terms interchangeably here, but you'll get the idea. And I found though that with just really this can be done in less than 5 minutes. You can just walk through this Flying J technique here and really pinpoint where the issue is, and then that will determine on which direction you need to go to get your return done. And we want to kind of think of this in terms of like Sherlock Holmes. You know, Sherlock Holmes doesn't, when solving a case, he looks for clues and he's very intelligent and wise and methodical about his process. And we want to kind of take it from a viewpoint of there rather than just jumping in haphazardly and wasting a lot of time, quite frankly, because this is one area where you can absolutely destroy a budget, or I've personally destroyed many of them. So um, here we go. Let's jump right in. So I'm looking here at a tax return. I've got a sample tax return I created. It's a 1065, but this will work on 1120S S Corp or 1120 C Corp as well. So for starters here, we want to just kind of show you the scenario. I'm looking at page 5 of a 1065 in the Schedule L, and you can see here total assets do not equal total liabilities. And in this particular software, which I think most software will do just the same, we have a diagnostic that spits out. So um, just click on that here. So the first step in this process is to identify the exact dollar amount that you're out of balance. And this is going to come in handy. You'll see in a little bit here, but so we are out of balance in this scenario of $36,882. So that is step one. Just find out what the actual amount is. Next, we're going to go to our source document, and again, for this sample here, we got just a dinky little trial balance here, but it'll get the point across. So we want to actually make sure that the trial balance that we've got is actually in balance. So in Excel, you can simply just box up the amounts here, and trial balance should add all the way up to 0. And I go down in the sum section down here and confirms that is 0. And if you're dealing with, instead of a trial balance, if you're dealing with a balance sheet and income statement or a P&L, just check to make sure that the net income on the income statement is matching the net income amount that was used for the retained earnings or the capital in the P&L or in the balance sheet. And that'll get you to the same spot. So that is step 2. Double check to make sure the trial balance is actually in balance. Next, we want to take a look at our Schedule L again. Go back to the form. And again, 1065, page 5. So on our Schedule L, we want to start with our beginning balance here. We want to make sure that this is actually in balance. And if you had prepared the return in the same software the prior year and just rolled forward, this is kind of a no-brainer. This is more important if this is the first year that this particular client was being prepared in this software. Then you want to just double check to make sure that this is matching the prior year ending balances on the prior year tax return. So just confirm those, and that'll be step 3. Okay, so now I'll show you here where the Flying J part comes in. So if we take a look at the Schedule L, we're gonna start from the top of the balance sheet here and go down into this J pattern here. And this is the steps, or this is the map that you want to use as you're going through this. So it just kind of resembles a J there. That's where the J comes from. So next step is in number 4. We're going to check with the total assets and make sure this ties out to our trial balance or our balance sheet. So here we got 1655 111. I'm going to go back to the trial balance. And here, since I don't have the total assets, I've put together just a cheesy little summation here. So you can see if I double click on here, this pulls up all the accounts, the 1,000 accounts for the assets. And then this one here, I did the liabilities and equities, and then the income. That's the remainder on here. So I've got our total assets here, 1655 111. That ties out. So that knocks off step number 4. Then we're going to go down to, and I could do these one by one, but if the total assets matches, I don't need to check each one individually. So it's a way to shortcut. And then since we can't check total liabilities and total liabilities and equity or capital on the 1065, we can't necessarily check those here because we are out of balance. So that's not going to make sense to do that. So what we're going to do is just go through the liabilities one by one, and then the equities except retained earnings one by one. And this one is pretty easy in this case here, where I've just got 2. I've got one liability and then the capital or the retained earnings. So I just need to double check this one here, and that ties out. And then we're going to skip over retained earnings as far as checking the total. But next step here, this is step 6. We are going to make sure that this isn't overridden. So this is Intuit ProConnect software I'm using here. I know Access Tax is, and ProSystem FX is the same, where you want to make sure that the inputs here are not overridden. So if we look at the actual inputs here, first of all, you'll see here that an entry with this asterisk overrides the automatic calculation of the program. So if we go down to the equity here, we want to confirm here that that's not keyed in there. And it's a real simple thing to do if you're not paying attention, where hey, I got this capital amount here on my trial balance. Let me just go ahead and key it in with all the rest of this stuff. But it's just a matter of knowing how your software calculates and not override this. And then and the other thing that could happen is if you're using a trial balance software and actually import into your tax software, a lot of times that will actually come in as one of your line items on your tax reconciliation when you do an import. So you got to go back in and clean that out. So that is step 6. We're going to make sure that that's not overridden on our capital. Let's go back to our form. And back down to page 5. Okay, so next one is step 7. We're going to we've gone through assets, liabilities, equity, and then we're going to be down into taxable income. And I think right off the bat, we maybe have a tendency to want to look at book income first because that's what our client gives us. But again, it's understanding how your tax software calculates. This is how ProConnect calculates. I know it's also how Access Tax calculates. It calculates the taxable income first, and then it reverses out the M adjustments to back into book income. So you won't actually find any inputs for book income anywhere in these 2 softwares, and I'm sure others are similar. So we're going to check our taxable income first, and here we got 179,489. And then I put together a little book to tax rec here, and oh, we got a problem. So again, the one thing I want to do here is I want to find out the exact amount that I'm off. So I got 179,489, and let's just put a little calculator up here. And then go back here. And look at that. You remember that number we looked at the beginning for our the amount our diagnostic was showing that we were off? That is the amount that we're looking for right there. And I'll just zip back to that here real quick to show you. So here's our 36,882, and that ties out. So that is a good sign. We have found close, and this is confirmation that this technique, at least in this scenario, is helpful because I didn't have to go through line by line every single one of the balance sheet items. And found out it has nothing to do with the balance sheet items. It's all in the income statement or the P&L side. So we'll take that and continue back to the forms. Okay. So next, we're going to just kind of stick a pin in that and recognize that's where we have an issue, but we're also going to continue with the J technique going back through. And so after we do our taxable income, we're going to take a look at our M adjustments. And we could potentially have M adjustments on both sides of our M1 here, and then we just want to take the net, want to take the amount that's added back to income and the amount that's subtracted out of taxable income, and just get the net. In this case, it's an easy one. It's just a meals and entertainment adjustment, 6296. So we'll check our little tax reconciliation. That ties out, which should mean that we should be off the same amount for book income from here to the beginning of the M1, and we're just going to prove that out here real quick again. We're just going to take the book income as shown on our tax return, and then we're going to subtract book income from our tax reconciliation. And boom, so that's confirmed. So I know we don't have any problems with, this confirms that we don't have any problems with our M adjustments. It's a problem getting into the taxable income. So that tells us that we need to take a look at the income statement items. And this is where it's really important to take a look at the amount that you're actually looking for here. So before going in line by line to check these amounts here, again, you want to go high level if possible. And what I like to do is I like to try to do a control F search on my, that's just the find function in Excel. And actually, I'll usually skip the last digit there when I do the find, just in case there's a rounding, like a round up or round down. And look at, I have something that came up here. So look at that number. There's that 3682. So it looks like we are missing interest expense input on this particular return. So let's just go back to the tax return. We'll go back to page 1 where interest is located, or should be located, and this is on line 15 and interest is missing. So we'll go ahead and just pop this in here real quick. 36,882, and that just confirm that's the amount that's on our trial balance. And then we'll do a quick recalc, and our diagnostic is out, or our diagnostic is now gone, and we'll just take a look at our schedule L to confirm. And bingo, now we got our assets and our liabilities, or assets and liabilities and equity are matching, and we are now in balance. So that is basically the gist of it. And what would have happened in here, we got lucky just because the full amount was off. But sometimes, you know, if I would have miskeyed this in and just missed a digit or club fingered it and transposed a couple of digits, it wouldn't have been as easy. And then we would have to go through and start looking at line by line here and checking that out. But it does help narrow down the issue to figure out where the actual problem is. And then the last step out of all this, and this is it's actually step 11. I call it a bonus step, but if you happen to have got in all the way through this, and even your taxable income and your book income all ties out, and you're still off, you're still out of balance, what this is going to do is tell you that the problem actually is in retained earnings, and or in this case, capital for a partnership. So what that means, a couple things you can take a look at there. Is you need to take a look and see if there was any contributions or any distributions that came out of retained earnings or capital during the year, and make sure those are recorded. On the partnership here, you would see these you'd see the distributions anyway in 19A. Contributions would show up on M2 down here, but and actually distributions will come up in M2 as well. But so if it wasn't, if you've nailed in that you have the contributions and distributions accounted for, or there aren't any on this particular return, then it's going to be looking at, okay, were there any prior year adjusting entries that were not pushed back to the client and recorded into the books? That could be an area where to look, or it could be that the books were not actually closed out in the for the prior year, and the accountant or the bookkeeper went back in and made adjusting entries after the information was pulled for the tax return. So that's when you're going to have to go in and start reconciling retained earnings. So that goes in a whole nother topic we're not going to cover today, but it does help finding this framework, this Flying J framework here. It helps narrow you down into the steps that you're going to need to do to figure this out. So I'm just going to run through the 11 steps here real quick again. So again, start with the dollar amount that you're out of balance, and you can find that in your critical diagnostic. Okay, and step 2 is going to be make sure that your trial balance is actually in balance. Make sure you're not working off of a bum trial balance that got flubbed up before it got to you. Then step 3 is to take a look at your Schedule L and make sure that the beginning balances, well, make sure that this is in balance also, but make sure that the beginning balances match the prior year tax returns ending balances. And then step 4 is confirm your total assets match your trial balance. Step 5, go through your liabilities one by one, and then any equities outside of the actual retained earnings or the capital. Check through those one by one to eliminate the possibility of anything in this section being off. Step 6, we're going to skip retained earnings as far as confirming this amount, but you're going to go into the inputs and make sure that it is not overridden. Step 7, continue down into the section M1 and confirm your taxable income ties to your tax reconciliation in your work papers. Step number 8 is your M adjustments. Make sure that your total M adjustments, the additions on the left and subtractions on the right, net those out. Make sure that they match your tax reconciliation. And then step 9, confirm that the book income here ties to the book income from your trial balance or your tax rec. Those should be the same. And then lastly, on step 10, wherever you found the issue, say if you did find the issue in assets or liabilities and equity, then you're just going to double check your inputs. And that's when you can start diving into the detail line by line. And then also if your taxable income or even your book income is off, then you can start looking into the individual line numbers, the amounts, now that you've at least narrowed that down. And then step number 11, or the bonus step, is then if everything else checks out here, you didn't find any amounts that were off, then the issue is going to be in your retained earnings or your capital, and you're going to take a look at contributions and distributions first. If secondly, you're going to make sure if there were any prior year adjusting journal entries in the prior year, make sure that those were actually pushed out to the client's books. Depreciation adjustments, real common one that we've seen. And then lastly, it may be an issue of you're going to have to, if there was some journal entries made after the books should have been closed, but they weren't actually closed, then you're going to have to take a look at the GL and find out or take a look at the GL and see if there was some retained earnings adjustments that were made after the fact. So that is the technique. I hope this helps. I know this has saved me a ton of time once I've been able to figure out quick way to Sherlock Holmes it and get right to the heart of the matter. And hope this gets your return done under budget and home to see your family. So have a great day. See you on the next video.